Hello and good weekend. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 29th of November. All right, let's start things off with Bitcoin. Remember last Wednesday, I told you guys as the price was up in this area, I said, look, I'm expecting more volatility to come into the market. And this is why that evening I talked about the concept of swing test. Swing test is where the price will swing up to a resistance point, pull down, blow through the resistance point, and then come back to the same area of that particular swing test. Now, typically, we will see the price react off of that swing test, and we can also tell if the price does not continue higher above that swing test, that's a bad thing. So this should be the very first support level on a breakout is back to that swing test. And we have seen this over the weekend here with BTC, US dollar, as well as a couple of other assets. So we talked about potential landing zones for this swing test. One of those being 14,000, the next being 16,000. Now your first reaction to this may be, oh my God, I lost it again. It's getting away without me. Well, we'll talk about that in a second. I think there's some alternate possibilities going forward. And we've also seen exactly the same thing happening with Ethereum. Remember, we talked about the swing test being 480, and man, it came down to that level to the penny just about. So former resistance becomes new support. So in today's report, I want to talk to you about a couple of things in terms of statistical probabilities, and then we'll flip it around and go into technical probabilities. Every weekend, what I like to do is go to the expected move and calculate that. And the way that we're going to do that is we're going to go into an option vendor like Deribit. And we're going to select, say, like the 25 December. We're going to pick a forward point in time that we care about. We're going to look at the current price, which is just over 18,000. And what we're going to do is we're going to pick that strike and zero in on that 18,000. And what I'm going to do is to calculate the at the money straddle price. Now, the way that we're going to calculate the at the money straddle price, you can see here's the bid and here's the offer, or bid and ask. And we're going to look for kind of a midpoint in between those two. Bid, ask over here. So these are the puts on the right-hand side, and we're going to hit that midpoint. So the average price of the calls plus the average price of the puts at the cycle that we care about, which is in this case 25 December, is going to give us the at the money straddle. And basically what this does is this gives us the one standard deviation expected move going forward, or a 68.2% probability that the price will be in that envelope over, in this case, the next 25 days, 17 hours, and 30 minutes. And we're going to do that for 25 December as well as 29 January. So setting the expected move for 25 December, we have an upper expected move boundary of 20,680. So we're going to move this one down to 20,680. We're close to it. And the lower level of the expected move is 15,620. 15,620. So we're going to move both of these up or in slightly. And that's close enough there. And then, of course, we're going to map it to today's current price. That is our one standard deviation, or 68.2% probability envelope going forward. How can we use something like this? Well, there is a certain probability attached with the price being at least this level, which we can maybe use to sell options. We'll get to that in a minute. Now let's go do the same thing for the 29 January. And for that cycle, we're going to have an upper level of the expected move of 22,060. And we're going to have a lower level at 14,240. And we'll just pull this one over as well. And that is our expected move into the month of January in this case. And I like to color these slightly differently just so that we can discern between the two. So again, expect the move 68.2% probability into late December and also late January. Now let's go into the technical end of things. This is where I want to look at from a technical analysis point of view, not only from price action, but also from energy analysis. This is the study that I call Fractal Energy Trading, which is a masterclass that we have available to all of our OMNIA members. Basically, what we're looking for is price moves in two manners. It moves in range expansion, and then it moves in range contraction, or sideways or nonlinear price, and then range expansion, range contraction, range expansion, range contraction. So a couple of things that we talked about over the last couple of weeks. We said that, look, with the price doing something like this, where we're shooting to the upside, volatility will increase. So the market will become more unstable. The reason why that happens, you can think about a man walking a tightrope on a high wire, right? If a little gust of wind comes along, you can get an oscillation in there. The wire can start to shake, and then the poor guys up there are trying to compensate, and the wire is going to start to bounce all over the place. And this is where it gets to be really, really dangerous, because we have oscillations or instability in the wire. And this is exactly what happens to price. The higher it goes, instability is just an inch away, because all it takes is one little data point which is not priced in, and all of a sudden, when in doubt, palms out, which is the old floor trader way of saying sell. Sell, sell, sell on uncertainty. So we had a ton of uncertainty coming in with the Thanksgiving Day massacre that came out on Thursday. And people sold down to, guess what? The swing test of 16,000 or close to it. So what you can see is that this period of time, there is absolutely no trend. Even though the front half of it was a severe trend, the back half of it was a severe trend in the opposite direction. So what do we have? A ton of energy. The daily chart is fully charged up and ready to go. Now, which direction? This is where we go into multiple time frame analysis. If I pull out to the weekly chart, the problem is that we're still down here at exhaustion. So this is what I see as the highest probability from a technical perspective for BTC versus the US dollar, is that I don't think that this is going to turn into, and I could be totally wrong, and I'd love to be wrong on this, but I do not think that this is going to turn into what is called a slingshot move. A slingshot move is almost like pulling back a rubber band and then letting it go, and then boom, goes to the upside. So we've seen plenty of these slingshot moves in the past. If we go back in time, during bull markets, you can see plenty of these occurring. So let's get out to a bull market back here in 17. You can see 3 or 4 days of pullback and then slingshot higher. About a week of pullback and then slingshot higher. You can see all of these slingshot moves. So the steeper that they are, the more violent the uptrend is. Now, I personally think that this is a good analog for what I'm expecting to see going forward. Maybe not necessarily this final little move, which is really evil. The market has a way of doing that. Just when people think it's going to break to the upside, it actually breaks in the opposite side, and then the slingshot happens. But because of the fact that we have a weekly exhaustion signal, I think we may end up spending a couple of weeks, maybe 3 weeks, with Bitcoin in kind of a holding pattern while everything else moves. Again, that's just a projection based on what we see in the weekly energy. So again, the weekly chart, let's pull out to today. The weekly chart is in absolute exhaustion. Remember, we had like 8 weeks straight to the upside. This thing deserves a rest. In fact, we don't want it to continue to rally, because what that means is ultimately this thing will fail and fail hard. Also, if we pull out to the monthly chart as well too, we can see we've just gotten into exhaustion. I would rather see the price hold out for a few weeks while other assets grab the baton and run with them. Now, speaking of other assets, which ones are best primed to run? It comes back to Ethereum again. So this is Ethereum on the daily chart. Perfect swing test at 480. This one I believe does have a better chance of doing the slingshot move, because look at the weekly chart. Weekly chart has plenty of energy in it. Monthly chart, just approaching exhaustion, not to the point where it's going to hinder things. So to me, from a technical perspective, and again, this is part of projection. We're not making predictions here. We're just looking at the statistical analysis of how the price is moving and the amount of energy potential. And I would say Ethereum has much more potential to move, at the very least up to all-time highs again from 560, which is a pretty decent move, if not higher from there. So really, this is our job, going through especially the top 10 here and seeing which ones have energy short-term and longer term. Ripple, no. Ripple is exhausted on the daily chart and is super exhausted on the weekly chart. Probably a poor candidate. Watch it make a liar of me, right? Bitcoin Cash, kind of, Bitcoin Cash is not really, here's an example of the swing test. This one failed the swing test. Broke out above 280, pulled down below 280. This is not one that we want to pursue right now because of the failure. Again, look at this pattern here in Ethereum. Swing test breakout above 480, comes down exactly to 480 and finds support. This is the type of coin that we want to accumulate. This is the type of pattern that we want to see. Let's keep on going here. Binance Coin, same problem here. Failure. That's a throw over. No good. Chainlink. Hard to say exactly where support is on this. I would say the swing test is about 13 and it's failed the swing test. Let's go to some of the other ones here. Cardano is actually good. Cardano has at least a daily energy availability and the weekly chart still has some availability to it. So Cardano passes the smell test here technically. Litecoin also is looking pretty good. Now this is a pretty sloppy swing test that it had. This is more of a cup with handle. So cup, and there's the neckline for this. So it survived that level at 68 and seems to have enough energy on the daily chart. And looking at the weekly chart, it still has energy as well too. So still some potential to get up and above $100 per coin. And from here, now we're getting into the bottom 10 of the top 20, and just things are just not going to be as good. You can just look at these and see which ones are failing the swing test, which ones are heading higher. Monero has gotten really sloppy after being a very, very good coin under great accumulation rules. It's gotten very sloppy lately. And if we pull back to the weekly chart, we can see why, because we gotten a little ahead of ourselves, and then the monthly chart as well too. Yeah, there's still some energy there. So Monero has just gotten sloppy and it's one to be avoided right now. Tron, okay, it is sort of holding support at 3 cents, but it did fail the swing test. Here's Stellar Lumens, and it's in exhaustion on the daily chart and on the weekly chart. It's to be avoided right now. And then finally, we get into assets like Tezos, no. Neo, no. You can see as we go down through the bottom end of the top 20 that we start to get into just sloppier and sloppier patterns. So really focus your attention on maybe the top 5 at this point. The one with the best chance of a slingshot move is Ethereum for right now. That is it for this weekend's report. Hope that helps. And we'll see you back here on Monday. Take care.